to this computer. All right, Matthew, we are recording. Lauren is here.
Hi.
Yes.
Hi, Lauren. Hi, Daniel. Thanks so much for having me.
How you doing?
Good. Yourself? Just enjoying the Canadian cold over here.
Nice. All right, Lauren, hit it.
What is atomic finance?
That's a great question. We're a company that is focused on building cool tools for Bitcoin, financial tools. So if you've used an exchange before, if you've heard of like Coinbase, or you've heard of another trading exchange, we do the same thing, but we allow for folks to do it without having to go and give custody away. So we allow for folks to take their Bitcoin, they can put it into our automated strategies, and they can hopefully earn a return on it. Yeah.
All right, cool.
I think I'm not sure if I totally understood that.
All right, Matthew,
Yeah.
you get into a 12-year-old.
All right, let's explain like I'm a 12. Absolutely. So Lauren, you're familiar with Bitcoin, obviously. Thanks to your dad. Have you just what have you done so far with Bitcoin? You've bought some Bitcoin and you're holding it?
Yeah, I'm just holding it.
Very cool. And are you familiar with any type of are you familiar with any like financial tools? Like, have you used I guess probably not. But I when you bought the Bitcoin, where did you buy it from?
Well, I get paid in it, so I don't really buy it.
Okay, you got paid in Bitcoin. Well, that's even more exciting. So imagine, and you've probably looked at the Bitcoin chart and you've seen, oh, Bitcoin goes up and Bitcoin goes down. How do you feel when that happens? Like you've probably been through like, oh, Bitcoin going really low in value and really high in value. I'm guessing you've noticed that, right?
Yeah, but if I was completely honest, I don't really care if it's going really high, if it's going really low.
Zen hodler.
You're a hodler. You're a Zen hodler. I love it. Do you ever wish that you could when it's really high, maybe you could like sell a little bit and then you could buy like twice as much when it comes down? Have you ever thought of that?
No.
No, you haven't. Okay, interesting. And most people haven't either. And most people make mistakes when they do that, right? When most people they sell when it's really, really low. They see, oh, Bitcoin price has gone up, and then Bitcoin price has gone down, and then they go and they sell it, and then Bitcoin price goes up again. And so as you might know, like Bitcoin, the value of Bitcoin changes a lot over a very, very short period of time. And that's tough for a lot of people. If you're getting paid in Bitcoin, you might notice, okay, my money's worth a certain amount, and then it drops drastically, and then it goes back up, which is fine over the long period of time if you're holding. But there's actually an opportunity there, right? So because Bitcoin goes up so much, up and down, it's actually possible to use some additional tools that would allow you to, maybe even make more Bitcoin. But the problem is, what do most people do? They trade on emotions, right? They do things on emotions. When Bitcoin is low, they're like, oh my gosh, I've lost so much money, I need to sell. But they're not thinking in Bitcoin terms. They're not thinking, oh, I want to get more Bitcoin. And then when it's high, they're thinking, oh, it's going to go even higher. I'm not going to do anything with that. So what we've figured out is most people just do things on emotions. They're way too emotional about the way that they're thinking about Bitcoin. Now, a really good solution for most people is just to say, just hold it, right? Which is what you're doing, Lauren, right? You've gotten paid in Bitcoin and you're just holding it. And that's amazing. That's a lot better than going out there and trading on emotion and being emotional about Bitcoin. But there is a slightly more optimal way to be able to accumulate Bitcoin with minimal risk. It's just most people don't know how to do that, right? And you need more advanced tools to be able to do that, right? Like, okay, when should I buy? When should I sell? But that's actually the most that's the most simple version of, you know, buying or selling Bitcoin. There's actually different types of tools that you can use. I'm guessing you've never heard of like have you ever heard of like what a futures contract or an options contract? I'm guessing you've never heard of that. No? I'll explain an options contract really simply. So imagine your dad says, "Hey Lauren, you know what? Right now, what's the Bitcoin price right now? It's $37,000 US dollars." So say your dad comes to you and he says, "Hey, you know what, Lauren? Do you want to be paid in Bitcoin this week, or do you want to be paid in Bitcoin next week?" And so you're thinking to yourself, well, my dad said he's going to pay me $100 worth of Bitcoin, but I don't know if Bitcoin's going to go up or down next week. And I don't know, I have this feeling inside that, you know, Bitcoin's actually, you know, going to go down. And so I'm going to hold off. I'm going to wait. And I'm going to say, "Hey, you know what, Dad, why don't you pay me next week when Bitcoin goes down, and then you get more Bitcoin," right? Or maybe you think the opposite's going to happen. You think actually next week Bitcoin price is going to go up, and you say to your dad, "Hey, you know what? Actually, pay me right now, and then I'll have more Bitcoin as it goes up." So there's different types of like tools you can use to kind of take advantage of like what's happening in the market. And there's another one that's called an option. So what is an options contract? And we'll see if you understand what an option. I'll get you to explain it back to me, Lauren. So basically, imagine next week, your dad says, "You know what, Lauren, I think Bitcoin's going to go all the way up to 45,000. It's going to go up really high." And you're like, "No, Dad, I don't think so. I think actually Bitcoin's going to stay below that." What you could do is it's called a call option, and it's basically selling a call. So if you think, "Oh, Bitcoin's going to be below, you know, say $41,000 by next week," you could say to your dad, "I think it's going to be below that, and I'm going to get you to pay me a premium. I'm going to get you to pay me some money in order to have more Bitcoin." So as long as Bitcoin stays below that next week, you get what's called a premium, or it's like a coupon, right? It's like a coupon that you use at the store, right? If you go to the store with a coupon, you can buy food for a cheaper price. It's the same thing here. Your dad thinks Bitcoin's going to go up to 45,000. And so him buying Bitcoin at 41,000, that's cheap, right? He has a coupon. He has like 99 cents off or $2 off on buying Bitcoin. Yeah, did that make sense, Lauren? Maybe you could explain to me what an option is, maybe.
So, yeah, to be honest, okay, let me try and put this in a different way. So you're kind of doing a bet with your dad, but instead of earning money, you get like a coupon type of thing, so you don't waste as much money.
Exactly. And what is the coupon is the coupon in dollars, or is the coupon in Bitcoin?
I think it's in Bitcoin.
Exactly, it's in Bitcoin. Good job. So what that means actually is that like if you were correct, right? If you were correct that Bitcoin stayed below that next week, then you just got a little bit of extra Bitcoin. But if you were wrong, well then the good news is Bitcoin just went up in value, right? It went up to 41,000. But if it went higher than that, then you know your dad won the bet, right? So if it actually goes up to 45,000, then your dad got some extra money and you lost a little bit of Bitcoin. Now, luckily, the value of your Bitcoin is worth more, but you lost a little bit. So that's what we've actually built. So now you might ask, like, okay, well, how do I know? How do I know when to do this? How do I know when I'm going to take this bet with my dad? And most people, you know, aren't savvy on, you know, looking at the trading chart or trying to figure out like what direction the market is going. So we've tried to make that really simple for you. We allow for you to take your Bitcoin and you can invest it into one of these strategies. Instead of making that bet with your dad, you know, you're making that bet against the market. And so, you know, we allow you to do that whole process. Now, Lauren, do you know how is your Bitcoin stored, out of curiosity? Do you have your own like wallet or?
I mean, I think I have my own wallet. He's the one that usually does everything.
Yeah.
I don't know what my Bitcoin is stored in, so he might not even be paying me. He might just say
Oh,
that.
no. Bank of Dad is looked after. It's in cold storage.
The bank of dad. I love it.
I thought you weren't supposed to have any banks.
Yeah.
Oh yeah.
Yeah, you're
Yeah, Dad.
just as risky as me.
Yeah. So you gotta trust your dad. I got you. But if your dad wanted to steal all your Bitcoin, he could steal your Bitcoin. I don't think he's going to though. I think he's saving up for you for the long term. But one of the nice things about Bitcoin is that once you're older, I'm sure your dad will set you up with your own proper wallet that you have control of. But one of the challenging things in like Bitcoin right now is that if you look out there, say if you wanted to do this bet with your dad, okay, well you could just tell him about this bet, and then you could pay up at the time. But if you want to go and do this, with the entire market, right? If you want to do any type of trading in the market, you basically need to trust a bank, because that's the only way to do it, right? You have to give your Bitcoin to someone else, and you have to trust them with it. And I'm not sure if you remember this, Lauren. Have you heard of like what happened last year with FTX?
No.
No, you haven't. Okay. So last year, what happened was there was lots of people using an exchange like this, using tools like I just described. They were doing these bets. And what happened was they stole everybody's money, right? So they didn't even have the money, right? They were acting like a bank. They didn't have everybody's money. And, they lost it. And, $10 billion was gone, overnight when everybody found out about it. And so this is crazy. Like I know companies like companies that were using them, just for their own business that they needed it for, and they lost a large portion of their Bitcoin because of that. And they were trying to do what's called hedging, right? So it's like if they're trying to sell Bitcoin to someone or buy Bitcoin, they're just trying to hold US dollars with it. And so what we're trying to do is make it so that you can be your own bank, right? So one day when your dad sets you up with your own wallet, and you got your own wallet, and maybe you want to do a couple of these bets. Don't do it with all your Bitcoin. Hold most of your Bitcoin in cold storage as your dad has it. But if you want to do a couple of these bets, you can do that without worrying about a bank, going and stealing all of your money. Does that make sense, Lauren?
Yeah.
All right.
Okay, awesome.
Crash course in options trading. There you go.
Yeah. Love it.
So thank you very much. And
Thank you so much. Bye.
Bye. Thanks, Lauren.
and then we'll start breaking down exactly kind of the service that you're offering here. So, but I guess well, let's start with who you are first of all. Like who is Matthew Black? How did you find yourself in this seat, and what brought you here? What were you doing prior to Atomic Finance?
Yeah, absolutely. So I was originally, so way back in 2014, my 2013, 2014, my dad actually originally got me into Bitcoin. And so he was a gold bug. And so, Bitcoin was really interesting to him. It's funny because he's non-technical, right? And so, but he understands the monetary aspects very well. And I'm more on the technical side. So I was just, there managing his Bitcoin way back in 2014. And honestly, I just forgot about Bitcoin for a couple of years, all the way, we were just hodling until 2017 comes along. And so I went to myself and my co-founder, we went to the University of Waterloo, and we were studying computer science there. And if you know anything about Waterloo, you might know that Vitalik is one of the folks that went to Waterloo. And so there was this very, very large, sorry?
I didn't know that, no.
Oh, okay. Yeah. He went there, and he was only there for a very short period of time. He was there for a year and then went down to Silicon Valley. But but basically we were there, but at the time there was a very, very large Ethereum community that was being built. And so we were really drawn to the idea of, hey, why can't anyone with a internet connection be able to get access to financial tools? So we were pulled a little bit away from Bitcoin for a period of time. After that, I started working with a company that was doing atomic swaps between Bitcoin and Ethereum. And it was funny, there was some Bitcoin maximalists on the team. And the reason they wanted to build this product was because they were being paid in Ethereum and they wanted to, trustlessly swap that to Bitcoin because that was the asset that they were interested in. And so while I was working with these folks, they really taught me all of the aspects of Bitcoin that are so important, brought me down the Bitcoin rabbit hole of understanding, why is Bitcoin so much superior as a money, the supply cap, the fact that it is truly decentralized, that there's no one party that can change it easily. And so then our question to that was, well, we have Bitcoin, right? And you have this, vibrant DeFi ecosystem that's being built in Ethereum. Now it has lots of problems, right? There's lots of hacks that occurs. There's lots of architectural problems with it. But why aren't there similar financial tools for Bitcoin? Why is it to do anything finance related, right? Like just hedging as a company, just being able to do any type of futures or options. Why do I need to go to a centralized exchange for that? Why is that the only way to be able to do anything? And so that's what got us started, building what we're building now with Atomic Finance. We wanted to build the tools that allow for folks to be able to get access to those financial tools instead of them having to go to centralized exchanges like FTX, where, they have the chance of being rug pulled at the end of the day. Yeah.
Man, all right, okay. So why trading? What brought you into this world?
Yeah, I think in particular it was so for trading, obviously the simplest way of going about it is just to buy and hold. But through my process of being, I'm more on the technical side for sure. But trading in particular, I think is interesting because Bitcoin is a tool for speculation, right? It's a tool for speculation against governments. What is the biggest risk to Bitcoin? That governments act fiscally responsible. And so I think Bitcoin is a great bet against that. But at the same time, I think there's an opportunity in terms of Bitcoin being able to monetize volatility. And so for myself, like I tried, trading in the past and made lots of mistakes, traded it on emotion. And it was only through the process of taking kind of the technical skills that I had learned and applying that and actually going and building a system that I realized that, the majority of folks, like trading gets a really bad rap because people are just going out and trading on emotion. But actually learning how to, build a proper system and stick to it instead of, just trading on emotion. I was able to, be able to build out tools that allow for, returns on Bitcoin or to take advantage of movements in the market and, slowly grow my own stack. And so that's what, kind of really inspired me in terms of wanting to be able to provide that to more folks in Bitcoin, is that I know that most people, trade on emotions, but if you can just build the system and stick to it, then there's, an opportunity to grow your stack over the next, 20, 30, 50, 100 years as Bitcoin goes from being, this volatile asset as it is today to being, the world, reserve currency.
All right, so interesting. I'm not sure if you know, my background was in foreign exchange currency options on the brokerage.
Oh, really?
Yeah, on the brokerage side. And I am, whenever anybody asks me, about trading and Bitcoin, I sit on the other side of the fence to you. I shut them down immediately. I say, do not trade that. Do not, whatever you do, trade your Bitcoin, stack your Bitcoin, self-custody your Bitcoin, and try and live your life as normally as you can. Do that for 5 years, and then you'll probably be in very good stead going forward. So yeah, you have obviously the opposite opinion. You and Tony have built a business here that allows people to trade with their Bitcoin, or at least some of their Bitcoin. And I think this is something that's probably worth having a discussion about, because let's say you have hodled through a cycle, at least one cycle, and you've got what you consider to be your core stack. And perhaps you're in a position now where you've got a little bit more time on your hands. You can start giving back to the Bitcoin community. You might have even found yourself a little job in the Bitcoin community, and perhaps can earn some Bitcoin, draw a salary in some way, shape, or form alongside your fiat job as well. There could be an argument in a case such as that, and obviously it's subjective. Everybody's in a completely different part of their rabbit hole journey. But for that person just described, there could be an argument there that you might want to engage with a company like yourself. Do you have managed strategies, or is this all on the user? I guess that's my first question.
Yeah, we offer two different things. One is passive strategies that are based on, we have a cover call strategy and a long option strategy that's coming up next week. And then we also have manuals where users can do their own trades themselves. Yeah.
Right. Okay. So first of all, I would say to this person, don't fuck around with the manual trading, because you will fall into the trap of the emotional trading. That's guaranteed, especially if you've had no experience in trading in markets at all before. And this is the key thing, because a lot of people that come to Bitcoin have come from all over different sectors. They've never, perhaps ever, even traded a stock or share, or even read some kind of book about trading. And
totally,
then, they find Bitcoin and it's, oh right, yeah, it goes up, it goes down. Oh, I could have sold here, and you get drawn into the day trading kind of nonsense. And there are a lot of charlatans out there in the space, drawing lines on charts that just really piss me off. And because they get people wrecked, and it's just really very, very, very dangerous for somebody to come in, get their fingers burnt, and then walk away for Bitcoin for another cycle until they get drawn back in. And the opportunity cost of that is just so damn huge. So, right, that little rant out of the way. But if you've got a strategic button there, and we're going back to our kind of hypothetical person here, and there's a covered call option, let's just say, please explain what covered calls are to somebody that might be considering exposing a tiny percent of their stack, like 1% of their stack, to a covered call option strategy.
Sure. And I guess first off, Daniel, I do want to preface that I agree with you that the majority of your stack, you should keep 90% of your stack in cold storage, and you should really only be doing manual if you know what you're doing and you understand options effectively. We offer only, long options. And so, the worst that you can lose is the premium that you're putting up, but you obviously lose quite a bit if you're, just day trading, which I definitely don't recommend to anybody. And so in terms of the strategies themselves, so we've got our cover call strategy. So what is a cover call? It's kind of what I was describing to Lauren earlier, which was, if you think that Bitcoin's going to stay below a certain price, like for the next week, as an example. So Bitcoin is currently 37,000. I think that Bitcoin's generally going to stay below, say, 42,000 next week. What I can do is I can sell a call. And what that means is the person on the other end that's buying that call, just for your audience, obviously, like what they're doing is they're paying a premium, they're paying a coupon in order to be able to get access to the upside in the case that Bitcoin goes above 42,000. So it's basically the right to buy Bitcoin at 42,000. Now, all of our stuff is Bitcoin settled. So it's not like there's no USD involved. It's all settled in Bitcoin. But essentially what folks are doing is they're doing weekly options. Now, there's other strategies that exist out there that what they've done is they've just put out a cover call strategy, and it's they've just sell a call every single week at the same time. They've performed terribly, if I might say, especially recently. Anytime you have.
So everybody fully understands. Let's take and we'll try and do very, very simple math just to keep it dead easy. So let's say somebody places 1 Bitcoin on Atomic Finance. Sounds like a lot, but it's just for the sake of easy math, right? Okay. And they write a covered call and we're at 37,000 right now. They write a covered call at $40,000 per Bitcoin being the strike price in a 1 week time, 1 week expiration. So what time of day generally is that expires, that option?
So it expires at 8 a.m. UTC. So I think that's 8 a.m. for you guys.
Right. Okay.
On Friday.
And that's the expiry. So that's 7 days from the point of you writing. Right. Okay. So then I've written the call at 40,000. You've bought it. You pay me the premium. Let's say 0.1 Bitcoin is the premium. I get that premium straight away. That's immediate settlement. Yeah. Mm-hmm. Now, if the price of Bitcoin stays below 40,000, option expires, nothing else happens. I've kept the 0.1 Bitcoin. You've lost the premium. If the price goes to 42,000, then that 1 Bitcoin, the call that I wrote, is now yours at a price of 40,000.
That's correct. Yeah. So what ends up happening is that if you put in that 1 Bitcoin, essentially what you've lost is $2,000 worth of Bitcoin minus the premium, obviously. And so that's being settled in Bitcoin. So you might get back, 0.95 or 0.96 of your Bitcoin back. Now Bitcoin has gone up obviously in the meantime, right? So you've had that appreciation from 37 to 40, but you have, lost a small portion of the stack that you put in. Yeah.
Right. Okay. So that's important because I said I lost the whole Bitcoin, but no, that's not correct. You're saying that it's the difference between 40,000, 42,000, right? Exactly. Right. Okay. That's important. And this is all just calculated by the software that you've written. So okay.
Exactly. Yeah. It's just like you just calculate, you just do $2,000, right? Because that was how much it went above the strike, divided by 42,000, which is the amount of Bitcoin lost. And then obviously you gained the premium, so that goes against it, the other side. So you might have, in that case, you might have lost, say $1,500 worth of Bitcoin, not the full 2,000, for example. But it's all settled in Bitcoin itself. So these are all like Bitcoin native financial instruments.
Right.
Yeah.
Okay. So now anybody listening to this at the moment is probably thinking, that it might sound interesting, but then you've got to look at the market dynamics as well. And as we're coming into a halving, I would say probably a bad idea to be writing covered calls because, you've got a big target on your back because we could have a green dildo overnight and, price has gone up by $10,000. So maybe writing covered calls in more a bear market situation would be more interesting, but then of course you need a willing buyer.
That's a great question actually, because you would think that the best time to be writing cover calls would be during a bear market, but obviously the challenge during a bear market, and for your viewers, like the coupon that's associated or the premium that's associated with the option changes depending on what's going on in the Bitcoin market. So obviously, if you have more volatility, Bitcoin is going up and down a lot more, the premium is going to be a lot higher. During a bear market, that premium is a lot lower. And so, we just went through a bear market of 6 months. We've been running the strategy for, almost 10 months now, 11 months. And
we would call this
we would call this
the delta of the option expiring. Is that correct? Is that how you word it as well?
The the delta of the option expiring.
The delta, yeah. So like the percentage chance of the option expiring, it would also
in the month. Yes, exactly.
Right?
Yeah.
Right. Okay. So if it's $37,000 right now, I could write a call at $40,000, at $41,000, at $42,000, and this is all calculated. I would earn a different amount of premium. I would earn more premium closer to the strike
Mhm.
closer to the current price than I would if I picked a further strike out of the money.
Exactly. And for those that don't know, like delta is, as Daniel just mentioned, is the probability of an option, or it's a derivative of the probability of an option expiring in the money or out of the money. There's actually strategies out there like in Ethereum DeFi that just used a really simple number, 0.1 delta, which just means 10% chance of the option expiring in the money, and they just sold those like every single week. And obviously, if you're taking a 10% chance every week, it's going to hit. And so that's what it did do. We take a very different approach where the reality is sometimes it's not a good time to take a trade, right? We've had months or 2 months at a time where we just don't take a trade at all. And then other months where, this month, for example, we had three cover calls in a row. But in general, you would think that during a bear market would be a great time to do cover calls, but it's also that you're receiving a lower premium. And so the times when this particular strategy actually made the largest returns was actually during the bull market, when you had much higher volatility, obviously higher risk, higher return. And it tries to, find entries, after you have a very large bull run, usually you generally have a pullback that occurs. And during that pullback, you can write a cover call when volatility is very high, and you can collect a very large premium. Now, sometimes it does, it recovers and it comes back. There is many times where, during the week, the actual Bitcoin price can actually go above the strike price. But generally but then the thing that matters is on expiry, right? So on the Friday, as long as it's below, or it's below the break even, right? So if you wrote it for a very large premium, it can go a little ways above the actual strike price before before you're actually losing money. And so we actually saw, historically the largest returns during the bull market. But the reality is like there's no risk-free, returns in Bitcoin, right? If you're looking to get any type of return, right, you're putting your Bitcoin at risk. If anyone is promising you guaranteed yield on your Bitcoin, it's a scam, right? If you don't know where the yield is coming from, you're the yield at the end of the day.
Yeah. Yeah, absolutely. So, so to make this again clear for the listeners, don't do this manually. You do have. So if I again, if I put the Bitcoin in and I just click, what would the button? What's the language you use? Like join strategy trading or
Yeah, you basically so you subscribe to the strategy for we used to be for a 1 month at a time, and now it's 2 months. We're trying to reduce the on-chain footprint due to obviously transaction fees are going up, so we don't want people paying for exorbitant fees. And what they do is they enter into it's called a DLC, a discrete log contract. It's basically like a smart contract on Bitcoin. But you think smart contract and your red flags go off. It's not like those Ethereum smart contracts. It's a really simple contract on Bitcoin. On chain, it looks identical to a Lightning transaction. And so you enter into this contract for 2 months. At the end of the 2 months, your Bitcoin is returned to you. It's returned to your self-custodial wallet. And then you make the decision at the end of 2 months whether you want to invest for another 2 months. So that's what the current flow looks like.
Okay. So somebody decides to sign up, they send across the Bitcoin. After 2 months, they are, and again, just for ease of math, if they've sent one across, after that 2 months, they might get 0.75 back because the trading strategy didn't work out, or they might get 1.5 back because it did work out.
I would say that if they're getting 1.5, it would be a much more aggressive strategy than our current conservative one. So we run a very conservative one. It's more likely that they're they gained. I think what was the largest premiums we've seen running the strategy so far is 0.5% in the month, and the largest loss I think was 1%, and so it's more in that range than getting 1.5 versus losing 0.25 Bitcoin. That'd be a crazy amount.
Generally, people say no, you get two bag, no problem. You send us one, we'll send you two, right? That would have been a red flag, Matthew. So yeah,
Absolutely, absolutely.
hard
No,
fact.
we're not guaranteed to double your money. Oh, double your money in 30 days. That's not what this is for. This is, you earn a small premium every month. Yeah.
All right, okay. And so how is that? Are you managing these trades? You guys sitting around drawing on whiteboards, coming up with this kind of stuff, or have you got some kind of AI algorithm software built robot trader? What are you doing behind the scenes as the team?
Yeah, so we've built out an entire back testing framework. And for those that don't know, what is back testing? It's essentially aiming to simulate a particular trading strategy historically. Now, if you think of back testing a strategy, what's the biggest possible problem that can occur? It's called overfitting. So what is overfitting? Let me give you an example. If I created a trading strategy that said, hey, you know what? This past year, I'm going to create a trading strategy that sells Bitcoin at $60,000 and buys back at 15,000. You're going to have great returns. You're going to have a great P&L at the end of the day, but it's extremely overfit because you just, fiddled with the data and, made it come up with a strategy at the end of the day. And so what we employ in the process of building out this backtesting strategy and simulating, trading scenarios is we do what's called walk forward analysis. So what this means is we might train the data on a certain period of time, say like 12 months or 24 months. And then, we use the information for that and we simulate live trading for 6 months or 3 months at a time. And so in that way, we avoid the chance of overfitting occurring by simply, doing that process of simulating live trading by actually looking at historical data. The other really interesting thing as well is that trading data for Bitcoin, it goes all the way back. It goes all the way back to 2011, 2012. But Bitcoin options data has only been available since 2019. So we actually do an interesting thing where we take the Bitcoin trading data and we're able to back test on that and use the signals from that and then use that to back test on options data going back to 2019. So in that way, we have much more of a historical record of like what Bitcoin is likely to do going all the way back to 2012 instead of just trying to do it on a very short period of time. Because as you may know, when building a trading strategy, it's very, very important to have as much data as you possibly can, especially historically, as well as when you're simulating live trading. Yeah.
All right, and I guess that the purists out there are going to be screaming, not your keys, not your coins. Why would you, ever consider counterparty risk with any part of your stack? So, how do you guys think about that as Bitcoiners yourself?
Yeah, so I think one of the things here is, you can go and you can, in terms of counterparty risk, that's one of the nice things about DLCs is that. So when you enter into this contract, right, so let's talk about the risks of what's involved with this contract. So you've got, the user who wants to put their one Bitcoin into this conservative cover call strategy. You've got the market maker who's doing the other side. But one of the nice aspects of this is you don't actually need to trust, the market maker. They put that capital up ahead of time into the DLC, and that's locked. DLC is really just a 2 of 2 multi-sig with a bunch of off-chain signatures, just like Lightning. So you don't need to trust the market maker. You do need to trust the Oracle. So we run the Oracle, right? So we provide basically the price data, or in this case for the strategies, we attest to the P&L. And so that is the trust vector, right? So I would love to build financial tools for Bitcoin that don't require that trust at all. But we run into the Oracle problem, which is that the Bitcoin blockchain does not have information on what the current Bitcoin price is, for example. And so obviously we need to rely on, an Oracle to be able to provide this data. Now, in the long term, we have plans to, move to a more multi-Oracle system. Say we're running one Oracle. You might have a 2 of 3 Oracle system or a 3 of 5. And so that reduces it even more. But at the end of the day, we think this is the closest thing that folks can do to get to, something that's non-custodial. Instead of just putting your coins onto an exchange where you can be rug pulled, at least your Bitcoin's being locked into a contract that's on chain where what the parameters are. And there's even some security things built in as well. Say like the Oracle disappears. Well, there's a refund transaction that exists within the contract for you to be able to get your Bitcoin back. So it's all about just like bringing as many properties of Bitcoin to financial tools for Bitcoin as we possibly can.
How have you guys kind of approached like the regulatory kind of nonsense over there? Have you got regulators, policymakers breathing down your necks? You are like what are you? You're an exchange, I suppose. Is that what you listed as? How does it work?
Yeah, so we're not we don't classify, we're not classified as an exchange. We're classified as a non-custodial wallet at the end of the day. And we build the software that allows for people to get access to these tools. It's just like if someone builds a Bitcoin wallet, right? That doesn't mean they're an exchange because they allow people to send and receive, right? And so we've done our legal due diligence and built out a system that really allows for this to be done in a very peer-to-peer manner. And there's certain regulations because of that peer-to-peer manner that we're able to take advantage of. And so we're now at the same time we're always keeping up to date on what the latest regulations are in various countries around the world. And so as things progress, we may need to change things and update policies that exist within the app, depending on the jurisdiction that you're in. Obviously, Daniel, I would love to just go out there and build financial tools for the whole world. You should be able to just have an internet connection and be able to get access to them. But unfortunately, that's not the reality just yet. So we have to obviously keep up with those regulations. Yeah.
Yeah. I mean, the reason I ask is because there's all kind of regulations coming out in Europe as well, and it's just an absolute nightmare. It's very difficult UK right now is just a disaster for getting access to Bitcoin exchanges and just buying Bitcoin with fiat currency. I just wondered how you guys were set over there, and could you even? I mean, I'm just trying to think of potential attack vectors down the line that you might face. Could you even be considered if the right asshole policymaker was looking at your business? Could you fall under the umbrella of a coin mixer, a coin join service, or something like that?
Yeah, so generally the coin mixers that have been affected by regulations were the ones that were taking custody. So if we remember something like Wasabi or Samurai or Join Market, none of those mixers, they're all non-custodial, and none of them have come under any scrutiny versus the ones that were actually custodial have. And so in that aspect, like we never touch users' coins. We don't even touch their coins. It's interesting even doing the comparisons to Ethereum, because for some Ethereum DeFi protocols, regulators have gone after them for deploying the contracts, right? You are the guys that deployed the contracts, and this is what occurs. But what's really cool with this is it's really just on-chain. It's a 2 of 2 multi-sig, right, with off-chain signatures. And so we're not even deploying the contracts, right? That's between the user and the market maker. And so in that aspect, we're fairly covered, luckily. Obviously, we're not immune to regulations changing, and it pains me also to hear that for you guys, the regulations are getting worse for just being able to get access to Bitcoin, because I think just that as a fundamental human right, being able to get access to Bitcoin, being able to buy it, being able to do that on the global market is such an essential human right. And so I hope we can fight against that in the long term. Yeah.
Yeah, fingers crossed, mate. Fingers crossed. All right, okay. So your service is global, or you're confined to only serving certain jurisdictions?
Yeah, we're available worldwide. We have certain conditions, like depending on the country. Say if you're from the United States, there's different conditions you need to meet versus the rest of the world. Americans are special. No, but so that's how we currently operate. Obviously, in the future, things might change and we might need to update that. But right now, we're just your run-of-the-mill non-custodial wallet that has some additional features inside of it that allow for these contracts to be written using this non-custodial wallet, which is really cool. And I hope that more folks build these type of tools, because I think it's exciting to see more things being built on Bitcoin in general.
All right, so now I want to know what's going on in-house. What's the discussion? You're looking at the markets, you're trying to put together some kind of strategy. You got the eye on the macro, you got the eye on, that the halving is coming. Is it priced in? The ETF is coming. Is it priced in? All of this kind of noise that's going on around the Bitcoin space. What can you share with us? And, what are you kind of putting out in newsletters or whatever else, or on your blog post, and where do you think you'll be executing a strategy over the next 6 months to a year?
Yeah, for sure. So I think a lot of people are way too bullish, and as we see, and just looking at if you look at the data for like puts versus calls. So calls are generally like, if you're buying a call, you're bullish, right? You expect the price to rise. Puts are, you expect the price to go down. We've been going through and developing strategies that actually take a little bit of advantage of both. So next week we're actually going to be launching our long options strategy that allows for folks to take advantage of long calls and long puts. It's so interesting looking at these backtests, because you see, wow, the puts performed substantially better than the calls, which just shows everyone is over bullish, right? Everyone is over bullish on where Bitcoin's going. They all expected the ETF last Friday to be announced, and that wasn't the case. And so I think, to be honest, in the short term, we're actually going to see Bitcoin go down a little bit over the next couple of months, and then obviously a reversal as we move towards the bull market. I suspect that people are a little bit too bullish on what's going to occur in the in terms of the next bull run. That's not to say I'm extremely bullish on Bitcoin long term, and it eventually just sucking in the entire world. But I think sometimes people are overly bullish in the short term and under bullish in the long term. And so if I was to tell people one thing to kind of change their mindset, would it be to set expectations in the right place as they come into the bull market. Yeah.
So win 100K, Matthew. That's all anybody listening to.
Honestly, Daniel, I thought it was going to be last cycle, and FTX played us. They were they were sitting there. They were sitting there, and they needed the Bitcoin price to go lower, or else because they had no Bitcoin on hand. So I think we're going to see it like the next bull cycle, like 100K. I think that's very, very within reach. People are talking about Bitcoin going to 500,000 or 1 million. I don't think we're going to see that this upcoming bull run. Even if the ETF comes out, there's ETFs all over the world, for God's sake. There's ETFs here in Canada. There's an ETF going to launch in Hong Kong, right? I think it's very overhyped. I think in the long term, yes, it will, allow for Bitcoin to grow in value. But in the short term, I think it's way overhyped. What are your thoughts on it, Daniel? Actually,
yeah, I don't know. America is still such the key market. Everybody watches America. I mean, we've got an ETF in Europe as well. Nobody cares. But as soon as it gets launched in America, people will go freaking crazy for it. That's where the money is, man. That's where the printing machine is. That's Wall Street will rush in. They've been too many people have been sat on the sidelines for too long because it's considered a risk-on asset in a lot of and a lot of money management is just not allowed to enter into trading this asset yet. So as soon as it gets green lit and it's considered a risk-off asset, then I think money piles in, and I think we go to the moon very, very quickly. I'd be interested to know Do you just service individuals, or have you had institutions, come in and ask you to, manage some of their trading strategies as well? What kind of interest have you found out there?
Yeah, we've definitely had folks approach us to say like, hey, like I'd like say miners or say other folks running funds that have asked us about like investing in the strategies. And honestly, I think the thing that's like that's holding them back at this very moment isn't the actual strategies themselves. It's that we're right now we're a small team. We're only on iOS, and so for them, managing putting a significant amount of capital in on an iOS device and kind of managing the private key security of that is just a little bit too much for funds. But we are obviously planning to, build out additional, build out on Android, build out on web, desktop applications that'll allow them to have much more granular kind of control of their keys. And so we're definitely excited to get more of that stuff out in the longer term. Yeah.
Yeah, I'd imagine mining firms would be very interested in entering into covered call strategy, weekly, monthly, on a recurring basis. Makes complete sense. Really.
Well, and I think as well, like for miners, it's a situation where they really need to do some management of their financials. We saw so many miners that just completely capitulated and went out of business because they weren't properly managing their finances, right? They weren't selling at the appropriate time, or they were too bullish, or they were taking leverage to go long, and then the Bitcoin price goes down and they're not able to meet expenses. And so I think it's so essential to have some type of like capital management like within miners in order to be able to survive for the long term. So I think cover calls are definitely going to be exciting for them as well. It's like they need to sell anyway, right? So you might as well earn a premium for it on top of that, for sure.
And I guess last thing to close this one out is, you guys are running a business. You need to be profitable, or there's no point doing it. What's the business model? How do you guys cover yourselves and keep the lights on?
Yeah, absolutely. So we take a fee on the premiums themselves. So obviously like the market maker themselves, they just take a spread on the premium, and then we take a fee on the premium that users earn, 8%. And so that's how we keep the lights on. That's how we keep the business running. Business ever is just giving things out for free. It's obviously a red flag. So we obviously want to continue building out these tools and want to continue building more things for Bitcoiners to be able to get access to financial tools without having to go get rugged on something like FTX. So yeah, excited to keep pushing out more stuff.
So if anyone listening has, are you looking to build the team? If somebody has the right kind of skill set and they're interested in getting hold of you, perhaps coming from legacy finance world, want to move to the Bitcoin finance world, where are you at? What stage?
Yeah, so we raised our seed round a couple years ago, and we're just working now on moving towards just increasing profitability and eventually growing the team probably next year. And so if anyone's like really interested in DLC development or excited about Bitcoin finance, definitely find us. You can find us on Twitter, send us a DM. We're always happy to chat about whether it's non-custodial finance or Bitcoin finance.
All right, man. Well, final question. If you had one last orange pill to give to somebody, who would you give it to and why?
Oh, orange pill would I give it to? Can I give it to who's that gold bug guy? Can I give it to Peter Schiff? No.
Yeah.
Oh man, I just want to see the world and see him turn into a Bitcoiner. I think that'd be hilarious. No, but I think honestly though, I think right now the really interesting thing would be the Milei, the new president of Argentina. Hey, he's already converting the country into using dollars. Why don't we orange pill him too? We'll have a second El Salvador down in Argentina. I love Buenos Aires. It's a beautiful city, and so if it's a Bitcoin city too, that's the plus.
Yeah, it'd be awesome, man. It'd be awesome. And yeah, let's hope he can make a change there, and he doesn't just turn out to be another politician with empty promises. I got a lot of fingers crossed for the people of Argentina that, you know, they don't get rugged on this guy that they're very, very excited about. Bitcoin Twitter's gone a bit crazy for him as well. We got to remember, it's just a dude that won a popularity contest, and there's a lot of people behind him with very powerful levers as well to pull in all kinds of directions. So let's not get our knickers in a twist. But it would be amazing if he, the very least he can do is just let Bitcoin companies flood in. You know, let the mining companies go and mine there, and be very, very friendly to them. Give them, you know, very good tax breaks, or, you know, let the exchanges flourish. Because we as the community can take care of the rest. We just need the jurisdictions, the friendly jurisdictions, the lack of regulations, no policymakers breathing down our necks like we have in the EU or in Canada or in the US. The countries that do that first, they're the ones that will prosper. I mean, look at El Salvador, right? How many people are moving there? It's crazy. People are moving there every week, and just because it's a friendly jurisdiction, like that's all you need to do, and your country will prosper. So anyway, Matt, it's been great to get to know you, and thank you for coming on, and thank you for building tools on Bitcoin. And please reach out to Matthew if you guys are interested in what we've heard today. And I look forward to catching up with you next year and seeing what's going on.
Amazing. Sounds good, Daniel. Thanks for having me.
See ya.